Hello guys, I hope you'll be fine and doing well. The different forms of business organizations with respect to accounting are very important for you to understand the accounting structure and to understand as well the business organizational structures. Many organizations are using financial accounting, some are using cost accounting, some are using financial accounting, some are using managerial accounting. And in the previous lectures, if you have in mind, we also discussed about the services organizations, the trading organizations, and manufacturing. The services organizations are those organizations who are providing just services. Though they are using accounting system, though they are using accounting information system for the processing of their financial transactions and financial activities, but they don't have a complicated structure. The structure with regard to financial accounting of the services organizations, that is very simple. Simple in the terms that there is no production activity, there is no cost accounting practice, there is no manufacturing cost sheet development. Simply they are providing services and they are recording the fees, and the calculation is very simple. Then later on we discussed about the trading organizations. The trading organizations with regard to services, that is a little bit complicated in the sense that they will provide the services along with the physical products, along with the physical commodities or stuffs. So physical recording is involved. The traders, they purchase ready-made products, they don't produce anything, they purchase ready-made product and they sell it to the ultimate customers or consumers. The third form of the business organization, that is the manufacturing. Manufacturing business or manufacturing organizational structure is complicated because they will be using cost accounting as well as financial accounting, right? Financial accounting will be used for income statement and balance sheet, while cost accounting is used to process the raw data and to process the cost related data of the production. So manufacturing sort of businesses or manufacturing sort of enterprises, they are using complicated structure of accounting. Here in the current lecture I will be just discussing the basic objectives, the advantages or disadvantages of the simple business types or simple business organizations. A business can be organized in one of several ways, and the form its owners choose will affect the company's and owner's legal ability and income tax treatment. Here we will discuss the most common options and their major defining characteristics. What are the basic kinds, or in other sense we can say what are the different types of these organizational structures? The sole proprietorship, the partnership, general and limited, the corporation, or in other words you can call it the joint stock company, right? The corporation, joint stock company or simple company. Limited liability companies are LLCs. What is sole proprietorship? A sole proprietorship is a business owned and operated by one individual. For a layman, for a common man, it's quite obvious and it's quite simple. Like if you are a single person and you have certain investments, you can invest money in a business. You can start that business by your own at a very small level, right? So the business size is very small. That's why a single person can operate, a single person can start very easily and very quickly within a short period of time with a very little capital investment. By definition, the sole proprietorship own all the assets of the business and the profits generated by it. They also assume complete responsibility for any of its liabilities or debts. It means, this statement is basically means that he can be responsible for every bad situation in the business. Because all the assets are owned by them, all the liabilities, he is responsible for all the financial obligations and for all the financial complications. He is the responsible one to sort it out within the stipulated point of time and to keep his business well growing. So It's not difficult for a single person because there are so many single person businesses which are very expanded, very much expanded throughout the world, but the owner might be the single, right? There might be there other persons who are working on behalf of the actual owner, but the whole responsibility of that business lies on the back of that single person, and that's why it is called sole proprietorship or a single person business. What are the advantages of the sole proprietorship? It is very easy to start, right? The formation is very easy. Very easily it can be developed, very easily it can be started. As I told you previously, that with a small capital investment, it can be started. So there is no complications, there is no legal procedure, legal processes involved, but simply you can start your business by developing a small enterprise, by developing a small services business, or by starting from small level trading. No registration. In comparison to other business organizations, there is no registration fees involved. There is no registration body to whom you are liable to register first your business. And again, the procedure is quite simple, right? Registration is not a big matter in single person business. No proper documentation is necessary to the regulatory authorities, right? No profit sharing. As the name identifies, as the name, it is quite obvious from its name that it is a single person business or it is a sole proprietorship. That's why there is no other person with you or no other one is involved with you to share your profits, right? Every business is started for the purpose of profitability. Every business, by definition, business means that any activity that can be started for earning the profitability. That's why if you have someone to share your profit, you are not a single person, right? He's your partner then. But if you are a single person, you can easily start your own business without any registration, without any legal procedure, without the non-profit sharing ratio. Then it is a sole proprietorship. Easy decision making. As you are a single person, you can easily take decisions. You are not supposed to ask from anybody. You are not supposed to discuss with anyone else. You are the sole person and you have the full discretionary powers to take any decision which is for the best interest of your organization. So decision making is good, decision making is easy, right? You are not liable to anyone. What you think to be good for your organization can be decided very quickly. Keep secrets, business techniques, right? All your business techniques are to be kept very secretly because you are a single person, and if you are not sharing your business techniques or your business secrets with anybody else, your business is safe. Nobody can copy your business tools, nobody can copy your business techniques, nobody can copy your promotional techniques, nobody can copy your advertisement techniques, right? Whatever you think to be best, whatever you think to be better for the promotional purposes of your business, you keep it secret. You don't share with anyone. Complete control, yes. Control is very easy. As the business is small, you are the only one. You can control your business well in time. Disadvantages is there are many advantages. Along with it, there might be disadvantages. Unlimited liability. Your liability is unlimited. What do we mean by the unlimited obligation? If you go into losses, your liability is unlimited. Even you can sell off your house, even you can sell off your personal car, even you can sell off your personal properties to make over the loss of your business. So by the unlimited liability means that the liability is not limited to a certain extent, and for fulfilling the liable position, for fulfilling the liability on your part, it is not limited to a certain extent. It can take everything, and it can take every of your property to fulfill the loss. Employee benefits such as owner's medical insurance premiums are not directly deductible from the business income taxes. Right? This is also a drawback, that your employees' benefits such as the owner's medical insurance premiums are not directly deductible from the business income. The third one is the raising funds. Raising funds is another big problem for you, because every business at the time of expansion, it needs to expand your business, and if you are short of the funds, you will go to a bank, you will ask your friend, or you will ask a financial organization to give you the finances, to give you the funds to expand your business or to fulfill any unfavorable situation. So raising funds is another disadvantage. Limited life, yes, its life is very limited, because if that certain person dies or if something bad happens, the life is very limited and this business gets ended. Loss and absence, right? There are, if you are absent, you might have seen different businesses where the owner is absent and the employees are working on behalf, they are they really suffers, because there might be certain losses which are quite impossible for the employees to fulfill at the time of the actual owner absence. So a big disadvantage is the losses, different losses in the absence of the actual owner of that business. Let's move on to another type, very important type of the business, partnership. As you can see, the name is quite obvious and it is quite clear for a common man that partnership business is another type of business, and that business is a little bit extensive, a little bit large in size as compared to the sole proprietorship business. A partnership is a legal relationship formed by the agreement between two or more individuals to carry on a business as co-owners. Legally, the partnership business can be started from two persons, right? As one person can start only sole proprietorship and more than one can start the partnership business. From 2 to 10 means that from 2 partners to 10 partners, they can start as per the rules, regulations of the Partnership Act 1932, which is adoptable in Pakistan. 2 members up to 10, they can start a banking business. For example, if you want to start your own bank, your personal bank, your individual banking business in partnership with somebody, one might invest the skills, the other one might invest the capital. Or you both, if you have the funds, you both can invest the capitals, and you both, or you many, can then share the profitability, right? So each member of such a group is individually known as partner, and collectively the members are known as a partnership firm. Right? These firms are governed by Pakistan Partnership Act 1932. 1932 Partnership Act explains the whole procedure, the regulatory procedures, the legal procedure, the proper documentation for starting your partnership business. Right? So, what are the complications in partnership business? From 2 members to 10 members, you can start only the banking business. And according to the International Accounting Standards, it is also clearly mentioned that from 2 to 25 you can start a general business, right? General business might be trading, service, or manufacturing, right? And a banking business is a special services business, so that's why only 2 to 10, not more than that. Why? There are legal constraints. There are legal constraints, and these legal constraints and legal obstacles are very accurately and very clearly mentioned in the Partnership Act, which is a booklet used at the time of developing your partnership business. Characteristics of the partnership. Number 1, maximum limit is 10 in case of banking business, as I recently told you, and 20 in case of other types of business. But this number 20 is now increased into new accounting standards, that is increased to 25. These are the characteristics. Number 2, contractual relationship. The agreement in writing is known as a partnership deed. Yes, partnership deed is very important because the contractual relationship is important, and this partnership deed tells to everyone about his responsibilities, about his job duties, about his rights, about his functions, specific functions, the proper profit and loss ratio, right? So the accounting which is used for partnership business, that is then different as compared to your normal financial accounting, right? Partnership accounting practices are then a little bit different and little bit complicated because the profit sharing ratio is very complicated to calculate for each partner. Sometime one partner, new partner is coming, sometime the old partner is going out of the business. So that's why these calculations are sometimes complicated and boring for an accountant to timely prepare the reports, right? So contractual relationship between the partners, which is called the partnership deed, is necessary, which will be mentioning the proper name of the business, the registered name, because in comparison to the sole proprietorship, partnership also needs to be registered with some regulatory authority, and that is called Securities and Exchange Commission of Pakistan, or the Partnership Regulatory Authority, who will be registering your name, your business, your capital, your partners. Your partnership deed will be signed. Legal members are involved in this partnership deed. Third, competence of the partners. Minors and insolvent persons are not eligible, right? As the partnership business has a rule, minors who are underage, who are below 18, and insolvent persons we mean those persons, those partners who are lacking money, who don't have money, and you think that if I involve that partner in my business, he cannot bring the funds well in time, he is called insolvent. And in other words we can call him as bankrupt. Bankrupt means having no money. So minors means below or underage, right? And insolvent, bankrupt persons are not eligible for the partnership business. Sharing of profit and loss. In absence of an agreement, they share it equally. If there is a proper agreement, if there is proper partnership deed, then it's very easy to share the profit and loss. But if the deed is absent, if there is no deed, then it is to be equally shared between or amongst the partners. Transfer of interest. No partner can sell or transfer his interest in the firm to anyone without the consent of other partners, right? Mutual consent is necessary. If mutually your partners are agreed upon a certain situation, or to transfer your interest or to involve any other new partner, it needs a very strong consent, written legal strong consent of the other partners, so that your interest can be transferred to anyone else. Number 6, voluntary registration. Registration of the partnership is not compulsory, right? Registration is not compulsory, but if you register your business, you will be entitled to several benefits, and it is considered desirable. Then partners are coming very happily if you have a registered business, right? You will get the benefits from taxation, you will get the benefits from other organizations, right? But if it is registered, then registration is not mandatory. But if you are not a registered firm, neither you can sue anybody at the time of dispute and at the time of controversies, and nor you can be sued by anyone, right? So you cannot go to the court of justice, right? The court of justice or the court will first ask about your registration, your legal status. So if you don't have any legal status, you cannot go to the court of justice in case of any controversies. Advantages: relatively easy to start. Again, like the sole proprietorship, it is also very easy to start your partnership business. The ability to raise funds, yes, there is a very good ability of the partners to raise the funds. If you want to expand your business or you want to enhance the circle of your business, your different partners can invest money and they can bring more and more funds. They can bring more finances to the business within a short period of time without any complications and without any obstacles. More skilled persons is the number of persons is more than a single person, so there might be different brains, right? According to a proverb that one brain is better than, right? Sorry, that two brains are better than one. So that's why your business will consist of different brains and skills and expertise. One might be expert in finances, the other one will be expert in accounting, the third one will be expert in investments, the other one will be expert in bringing more business and more partners and more different scenarios to the business, right? So more skilled persons are there in the partnership business. Loss sharing, yes. In the sole proprietorship, you were told that the liability is unlimited, right? But here the liability will be limited to the certain of investment. Is according to the partnership deed, a very clear position is described of the business, and a very clearly it is calculated that every partner will be sharing such and such ratio of profits and will be sharing such and such ratio of losses. So loss sharing is a good component in the partnership business. It is an advantage to it because the partners, they are not afraid of heavy losses, because they know that there is a proper certain limit on loss sharing. No loss in absence, and there is no loss in absence because if one partner is absent, the other might be available there. If two partners are absent, 3, 4, 5 will be available there. So loss and absence is not possible there, and that's why it's its advantage. Disadvantages includes unlimited liability. Yes, the liability is also unlimited. In comparison to the sole proprietorship, here also the liability is unlimited, right? Certain partnership firms are limited liability partnership firms and certain are unlimited liability partnership firms. It is to be decided beforehand in the partnership deed, right? The profit sharing sometimes be equally. If it is equally, then again complications arise, and if it is not properly divided, right, within the partners, it is a disadvantage that profit sharing, some persons or some partners will be getting higher ratio or some will be given the lower ratio, so that there is a disadvantage to the partnership business. Conflicts, as partners are many in number, right? There are so many numbers of the partners, therefore the conflicts arises, controversies arises, because different persons, they are not getting to be mutually agreed upon a certain situation, and it becomes difficult for the business scenarios, and it becomes sometimes difficult for all the partners to be agreed and to be centralized on any one problem. Limited life, again, if a partner dies or if a partner he leaves the business, the partnership business is dissolved, it is terminated. Sometimes if your operations are not satisfactory to the concerned party, or if your operations are not satisfactory, or if you are doing an illegal business, the court might close, the court might dissolve your partnership business. Transferability is difficult. Again, you cannot transfer the share until and unless there is a proper provision in the partnership deed or mutually agreed upon this situation. The third one, the very extended, very large type of organization, that is the corporation. And corporations are, in other words, you can call the multinational corporation, the company or the joint stock company chartered by the state in which it is headquartered, is considered by law to be a unique entity, a separate and apart from those who own it, right? This organizational structure is now complicated, it is now extended, it is now large. There might be a separate entity to your business having its separate name. The Securities and Exchange Commission of Pakistan requires huge documentation for it, right? And this huge documentation will sometimes becomes difficult for the partners because a large number of documented procedures are involved. This type of business can be started by 7 promoters. They are called promoters. The 7 promoters can start this business. One might be the managing director, right? The other 3 might be board of directors and board of governors, right? These 7 members will start the whole process, and corporations are then started in consultation with the Securities and Exchange Commission of Pakistan. A corporation can be taxed, it can be sued, it can enter into contractual agreements. The owners of a corporation are its shareholders. The shareholders elect a board of directors to oversee the major policies and decisions. The corporation has a life of its own and does not dissolve when ownership changes, right? So it is very flexible. This type of business is very flexible because you can be taxed, you can be sued, you can have a separate entity, you can have a separate name, you can have a separate artificial existence, right? It is called an artificial person. You might be having a common seal, you might be having a common name, right? So your name, your seal, your position is totally to be different, right? And registered. The board of directors will oversee the whole policies of the organization, and they are operating this sort of business. Types of corporation are 2: C corporation and S corporation, right? C corporation, sometimes they are sharing their taxes, right, to the tax authorities, right? And there is dual taxation. And the S corporation, they are not sharing, or they are not paying the taxes dually, right? Individual income is taxed and the total income of the business is not taxed. Advantages of corporations: limited liability. Here the liability is limited, right? There is no obligations, right? There is no unlimited position. All the liabilities are limited only to the extent of investments. A transfer of ownership by sale of stock: yes, if you sell the shares, right, your ownership changes. For example, if you invest money in HBL, or you invest money in the McDonald's, right, or other business, if you buy the shares and you keep the shares for a price hike, right, and then you want to sell it, you can sell your interest. If you sold out these stocks, right, the person buying your stocks can be the owner of that business, and he will then at the end he will receive the profitability. Easier to raise capital through shares and bonds? Yes, through shares and bonds. These 2 components will be discussed in the later chapters, but here due to the time constraints, I would give you brief introduction about the shares. Shares are the ownership, legal ownership, that can be bought by a small sum of money invested in a company. They will give you the shares, right? You will become the owner. But if you are giving the funds to the company in terms of loans, then you will get the bonds. The bondholder is the creditor and the shareholder is the owner. Continuity of existence. Yes, these sort of businesses are continuously operating their businesses. They are continuously operating their business procedures, and there is no breakdown, right? According to the going concern principle, these businesses carry business activities very continuously and persistently. Benefits of large scale operations: is these kinds of businesses are large, the operation is very huge, and in terms of multinational operations, then it can expand to different countries. That's why the scale of operation is very huge and large. Professional management, yes, the management, the managing directors, the managers, the other different shareholders, they are bearing very good expertise and they are bearing very good managerial skills, and that's why the management of the corporations or the multinational corporation, that is professional. By the term professional, we mean that it is highly expert in nature. Social benefits, there are so many social benefits in the organizational structure, and every firm, every multinational corporation, they are socially very good to the community, they are socially very good to the society, and they are producing products, they are providing services, and individuals can benefit from their large scale productions and large scale operations. Disadvantages, formation is not easy. As I told you at the start of the corporation, that the formation is not easy in the sense that legal procedures are required, legal documentation is very huge, Securities and Exchange Commission is involved, name selection is a complicated process, registration is a complicated process, then heavy investment is required, right? With small investment you cannot start your corporation. Controlled by a group, yes, there is a group of persons who control the whole company, and that group is the founders, right, who obtains the founders shares, right? By the founder shares we mean a huge number which is retained or which is bought by the promoters of that organization. Many legal formalities, again and again I am telling you that legal formalities are so many in starting up or building up of this corporation type of business. Excessive government control, yes, government intervention is very high, you are exposed to many government policies, right? And you will be controlled by the Companies Ordinance 1984. Delay in policy decisions, your decisions cannot be very quickly carried out, you cannot quickly decide, right? Board resolutions are passed for it, right? The consent of the shareholder is taken, the consent of the other concerned parties, whether stakeholders or the stockholders, whether directly or indirectly involved with your business. It is very much complicated for corporation type of business to take right decisions well in time. Limited liability company, sometimes it is called LLC, right? It is a limited liability company, and this business structure protects the owner's personal assets from financial liability and provides some protection against the personal liability. By the limited liability company, I told you so many times in the previous lecture as well as in this current lecture that the business structure protects the owner personal assets. Your personal assets will not be at stake, because you know and you are confident for it that you will be only responsible for whatever investment you have made in the company. You will be responsible to the extent of your investment. It is designed to provide limited liability features of a corporation and the tax efficiencies and operational flexibility of a partnership. Formation is more complex and formal than that of general partnership. LLC must not have more than 2 of the 4 characteristics that defines corporations. Limited liability to the extent of assets, right? Continuity of life, centralization of management. By the centralization of management we mean there will be a certain group who will be controlling that total management. And free transferability of ownership and trust. In comparison to other businesses, the transferability is very easy because you can sell out your shareholding position, you can sell out your shareholding portion, and you can transfer it to other interested parties. Advantages, again, limited liability, tax flexibility, less paperwork, investment allocation flexibility, freedom in management, and limitless ownership. Limited liability, we mean that you are responsible, your financial obligation will not take you to an unlimited scenario. It will not suffer you to an unlimited position. There is tax flexibility. You can defer your taxes, right? Your taxes can be deferred to the next year, right? Less paperwork, because this limited liability company or limited liability partnership, sometimes there is less paperwork involved in it. There is no huge documentation and no huge legal procedure involved, right? So that's why less paperwork is involved. Investment allocation flexibility. You can allocate your investments as the number of employees, the number of shareholders is huge in this organization. So you can very easily allocate your investment, and you will be flexible at allocating your investment in different departments, in different projects, in different financial projects, right? It is a good advantage of the LLC because your investment can be allocated to different categories. Freedom in management. Yes, the management is free. Everybody is free because every shareholder is given proper rights, and these rights can be utilized whenever there is annual general meeting or other meetings. All shareholders, they meet and their consent is taken, their mutual consent is taken for deciding over any situation. Limitless ownership. Yes, there is no ban, there is no constraint for involving more and more shareholders. Limitless ownership. You can involve many partners, you can involve many shareholders or stockholders if you need more funds and if you want to expand your business. Disadvantages: higher registration fees, government regulations, yes, lack of case law, limit on building capital, self-employment taxes, right? Higher registration fees, as this is a big business, this is a huge business, you will pay more registration fees. Your business requires more legal fees because of the size and nature of your company. Government regulations: from time to time government will interfere in the regulatory sections, and these regulations, the taxes, policies, income tax law, the other business law, commercial law, mercantile law, these are the laws which are governed by the government, and government from time to time making changes in these regulations, and which are later on applicable to these corporations. Limit on building capital. Sometimes your capital is sometimes your capital is banned. Your capital is set on a certain limit. You cannot increase your capital, and that's why that is a big advantage of the LLC, that your capital is limited to a certain extent and you cannot increase your capital more than that. Self-employment taxes. There are more taxes to be levied on your employment, right? If you are employing more and more persons, you have to pay more and more taxes. Thank you so much for giving me the time, and once again, thank you everyone.